Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. Markets have just closed. This is Monday, 21st of September, and this is the daily report for gold and silver. We do have gold trading lower on the day, silver slightly up. We'll look at that in a second. 1132.90, call it 1133, with a low today of 28.70 and a high of 39.40. So we're not talking about a tremendous range. We're simply looking at a market that's had about a $10 range on the day. As far as silver goes, that is trading, as I said, nominally higher this morning, up right now about 4 cents, between 2 and 4 cents at 15.19. We've seen it trade as high as 26 and as low as 10. Again, a quiet day in terms of the range in the precious metals and the moves or net change for the precious metals today. So traders, I did want to spend this morning and talk a little bit about our long-term as well as our short-term view of the market, specifically gold in this case. And in terms of my short-term or interim view, I think we could see a little bit more pressure, a little bit more downside in gold. My long-term view, I believe that we have some factors that could lead us to believe that we've exhibited really the majority of the corrective period that we've been in. And to illustrate that, we'll look at a monthly chart. But first, let's take a look at this daily chart. And I've got an Elliott wave count here along with a fib retracement. Now, the fib retracement is simply looking at the rally from, call it 1070 all the way up to 1171. So you've got this rally right in here. Now, when we do that, we get a couple of different levels, and there's no doubt our current Elliott wave count puts our long wave 3, this is of course is a bear count, but our long wave 3 concluding at 1070, that's our low. We get this nice counter wave, about a $100 rally, which is just about par for the course. From there, we get the market coming down and testing just below the 61% to test roughly at that 50% retracement level. Excuse me, I meant the 78% retracement level, down at around, call it 1094. And so that was the low that I was looking for as recently as last week. That's right here. We certainly saw that. Market comes back and tests just above the 38% retracement. You can see we're trading at 33 right now, and that is precisely our 38% retracement. I think that what we're going to see, though, is our one wave up and then some sort of an A, a B, which I think we pretty much completed, and then a final C wave down. That's going to complete this cycle and complete wave 5. So traders, I have just added one other addition to this fib retracement. Now we've created a fib retracement, which is just from the 1171 down to this 1100, and you can see that the market kind of topped out at a 61% retracement. That's 1142. So typically, if we're looking at, for example, this is our A right here, and this being our B wave, typically what you will see is the B go anywhere between 50 and 75% that of A. 61%, it certainly meets criteria. It's above that. And then, as I said, we'll probably get one final C wave down. That will complete the cycle itself. And then from there, we should move back into some sort of a 1, 2, 3, 4, 5 scenario. So traders, as I said, I wanted to look at the long term as well as the short term. So short term, as I said, I do believe we could see a little bit more downside. But in terms of the long term, and this is where it gets really exciting, we're pulling up a monthly chart. And what I am trying to ascertain with some sort of certainty is whether or not we have actually concluded, in terms of our major count, this corrective major fourth right in here. Our system right now is telling us we had our A, B, C, B. We have our final C here, our 5, as well as our 4. We've completed this entire fourth wave down. Considering we had this tremendously long wave 3 up, what is interesting about that is that when we look at the actual retracement levels, the first level that we want to talk about is 61%. And as I said on the show on Friday, this is the point I really want to see the market move to. However, there's another fib retracement that's quite compelling in terms of giving us an indication that we could be looking at a potential bottom in the market. And traders, I believe this is where it really gets exciting. Now realize this is a very, very long-term view of the market. I'm looking at a monthly chart. So the fact of the matter is, as I said, I still think that we could exhibit or see some more short-term downside pressure in gold, but what we want to determine is, have we found some sort of a bottom in the market? And as I said, there was another compelling data point that I want to look at, and that is if we take a look at the entire rally itself, meaning from about $300 up to $1,900, and that's exactly what I've done. I've added a second fib retracement that's much more long-term. This one is starting from about 2009, so about 700 to 1900. This incorporates that entire third wave. When we do that and we look at our 50% retracement 1092, as you can see, that really pegs the bottom of the market, and over the last 3 months, that's been the tested low that is held. And that's what really has gotten me excited. Does that mean that we've got imminent liftoff? Absolutely not. We are still a ways away from seeing the market really genuinely spike up. But the real question has got to be is, at what point will it stop falling? Will the price stop really declining, as we have witnessed this tremendous decline from what, 1900 down to 1092, so these lows here. And I find it quite interesting that it comes to precisely a 50% retracement of this larger move here. When we look at, as I said, the shorter of the two, which is this retracement right in here, that's when we get the 61% at 1156. So, as I spoke about on Friday's show and through last week, I find this to be a most compelling piece of data. And the fact of the matter is that although we have been under pressure, we're trading in a very, very tight range at this point, and we're at the third consecutive month in which we have seen a 1090 in that area, 1070, 1090, that area actually holding as a historical low, following the dramatic rise to our record high at 1920 and then subsequent fall from grace. So traders, as I have said, I do believe we are going to see a little bit more downside from here. Specifically, where can we look for this market to fall to, and what are the price points that are, to me, pretty critical price points? Well, 1133, that's the point at which we are just at, actually slightly under as we're trading at 3280, but call that a push. We're pretty much at that point. If this level doesn't hold, below that, of course, we have 1121 with major support at 1109. That is a harmonics based upon two different fib levels, one level from 1232 to the bottom, the other one from roughly 1171 to 1070. So those two fib retracement points. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.